Given the price history and forecast for Bitcoin, a long-term investment strategy appears to be the most suitable approach. While the recent price action has shown some volatility, the overall trend suggests an upward trajectory. The forecast price indicates a continued increase in the coming weeks, supported by the fact that the resistance price is above the current price. This suggests that the price is likely to break through the resistance and continue to climb. Therefore, I recommend a long position on Bitcoin with an entry price at $95,000. A stop loss can be placed at $92,780.55, the support price, to limit potential losses. The target price should be set at $102,000, which is the recent high point and represents a significant upside potential. This strategy allows for capital appreciation over the long term while mitigating risk through a well-defined stop loss. Based on the provided Bitcoin Cash price history and forecast, a short-term bearish strategy appears most suitable. The historical data reveals a recent price decline, and the forecast predicts further drops in the coming week. The price is currently near its resistance level of $461.90, suggesting a potential for a pullback. To implement this strategy, an entry point around $440 would be appropriate, allowing for a potential profit if the price drops towards the support level of $415.90. A stop-loss order should be placed at $455 to limit potential losses if the price unexpectedly rises. The target price could be set at $410, aiming to capture a significant portion of the anticipated price decline. This short-term approach capitalizes on the current bearish momentum and aims to generate profits from the predicted price drop. Based on the provided price information for stacks, a cautious approach is recommended. The historical prices show some volatility, with recent fluctuations indicating potential uncertainty. The forecast price suggests a downward trend over the next week, reaching as low as $1.40. This bearish outlook, coupled with the proximity of the current price to the support level of $1.526, suggests a potential risk of further decline. Therefore, a short-term short position on stacks is advisable. An entry price of $1.56, slightly above the current price, would allow for some margin of safety. The stop loss should be set at $1.60, ensuring a limited downside risk if the price unexpectedly rebounds. The target price could be set at $1.45, aiming to capitalize on the anticipated price decline while staying conservative. This strategy prioritizes risk management and seeks to profit from the potential short-term weakness in stacks. Given the price trends and forecast for Ethereum, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile period with both upward and downward movements, indicating potential for short-term fluctuations. The forecast suggests a decline in price, with the lowest predicted price being $3,200. However, the current price is still above the support level of $3,069.17. This suggests a possible short-term bounce before a potential downward trend. Therefore, a short-term short position is advisable to capitalize on the potential price decline. An entry price of $3,380, slightly above the current price, would be appropriate. The stop loss should be set at $3,450 to limit potential losses if the price unexpectedly rises. The target price should be set at $3,200, aligning with the lowest forecasted price, allowing for a reasonable profit potential. This strategy aims to capitalize on the anticipated short-term decline while managing risk through a tight stop-loss order. Given the price trends and forecast for Ripple, a short-term investment strategy focusing on a long position appears promising. The historical prices show a general upward trend, with the recent price hovering near the support level of $2.3385. The forecast indicates a potential rise towards $2.39, aligning with the historical trend. Therefore, an aggressive strategy would involve entering a long position at the current market price, with a stop loss set slightly below the support price at $2.32. This protects against unexpected price drops. The target price should be set at $2.46, aiming to capture a significant portion of the potential upward movement towards the resistance level of $2.4596. This strategy capitalizes on the short-term bullish momentum predicted by the forecast while managing risk through a well-defined stop loss. Based on the provided Binance Coin price history and forecast, a medium-term investment strategy appears most suitable. The historical data reveals a volatile yet generally upward trend. While the forecast suggests a slight dip in the near term, the overall trajectory points towards continued growth. This suggests that a long position could be beneficial. An entry price of $705 could be considered, aligning with the recent price action and offering a potential entry point before the anticipated upward movement. A stop loss of $695 would protect against a sharp decline, while a target price of $725 would capitalize on the projected price increase. This strategy balances risk and reward, aiming to profit from the medium-term bullish momentum of Binance Coin. Given the price trends and forecast for Stellar, a medium-term investment strategy appears to be the most suitable. The historical price data shows a recent upward trend, with a noticeable increase from $0.331 to $0.452 in the past 2 weeks. While the forecast suggests a slight correction in the near term, it still indicates an overall upward trajectory. Therefore, a long position is advisable to capitalize on the potential for continued price growth. An entry price of $0.425 aligns with the current price and a support level of $0.4215, providing a solid foundation for the investment. The stop loss should be set at $0.419 to protect against unexpected price drops. The target price can be set at $0.451, aiming to capture the potential upside before the price reaches its recent high and potentially encounters resistance. This strategy allows for a balance between risk and reward, aiming to profit from the medium-term bullish outlook for Stellar while mitigating potential losses. Based on the provided information for Toncoin, a short-term investment strategy appears to be most suitable. The historical price data shows a downward trend, with the forecast indicating further declines. The forecast suggests Toncoin could drop from its current price to as low as $5.06, while the support price sits at $5.066 and resistance at $5.359. This indicates a bearish outlook in the short term, making a short position the most advantageous strategy. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $5.32. The stop loss should be set at $5.40 to protect against any unexpected price recovery. The target price should be set at $5.1, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $5.066. This strategy capitalizes on the anticipated decline in price while mitigating potential losses with a well-defined stop loss. Based on the provided Cardano price information, a medium-term investment strategy appears most suitable. The historical price data demonstrates volatility, with fluctuations ranging from $0.8498 to $1.1. The forecast suggests a slight downward trend in the coming weeks, with prices potentially dipping below the current level. However, the support price of $0.8498 indicates a strong underlying foundation, suggesting that a significant drop is unlikely. Therefore, a long position is recommended for a medium-term investment horizon. An entry price around $0.926, slightly above the current price, allows for some room for price correction before entering the trade. A stop loss should be placed at 89 cents to mitigate potential losses if the price drops below the anticipated support level. The target price can be set at $1.09, aligning with the higher end of the forecast range and capitalizing on potential upward momentum. This strategy allows for a balanced approach, aiming for moderate gains while managing risk effectively. Given the price trends and forecast for Litecoin, a short-term investment strategy is recommended. The historical prices show a recent peak followed by a decline, with the forecast suggesting further downward movement. The current price is relatively close to the support level, indicating a potential for further downward pressure. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. An aggressive short-term investment strategy could involve an entry price of $102, aligning with the current price. The stop loss should be set at $103 to protect against any unexpected price recovery. The target price should be set at $99, slightly above the support price, allowing you to take profits before the market potentially rebounds. Given the price trends and forecast for Doge-Coin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations around the $4.80 support level. The forecast suggests a slight downward correction in the short term, followed by a potential rebound towards the $4.90 to $5 range. This suggests a buying opportunity with a potential for moderate gains in the medium term. Therefore, a long position is recommended with an entry price around $4.85, aligning with the support level and the expected price rebound. A stop loss should be set at $4.75 to protect against a deeper correction. The target price could be set at $5, aiming for a 3% return. This strategy balances risk and potential reward, allowing for profit-taking while mitigating potential losses. Based on the provided Aptos data, a medium-term investment strategy appears most suitable. The historical price shows a general upward trend, but the forecast suggests a slight pullback in the coming weeks. This indicates a potential buying opportunity at a slightly lower price point. An entry price around $8.80 would allow us to capitalize on the potential for a rebound towards the resistance level of $11.64. The stop loss should be placed at $8.73, the support level, to minimize potential losses. The target price could be set at $9.60, representing a moderate gain while allowing for some room for price fluctuations. This strategy balances risk and reward, aiming to capture a portion of the potential upside while mitigating potential downside. Given the provided price information for SE, the 2-week price change suggests a downward trend, while the 1-week forecast predicts further declines. The historical prices show a consistent downward trajectory, with the current price hovering near its support level. The resistance level is relatively high, indicating a potential for continued downward pressure. Therefore, a short-term bearish strategy is recommended for SE. An entry price of $0.414, aligning with the current price, would be suitable. A stop-loss order should be placed at $0.422, slightly above the current price, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.394, which is below the historical lows and in line with the predicted price decline. This strategy capitalizes on the anticipated downward movement of SE in the short term. Based on the provided information about Ethereum Classic, a cautious short-term investment strategy is recommended. The 2-week price change shows a fluctuating trend with a slight downward bias, and the 1-week forecast predicts further decline. While the support price is at $24.33, the resistance is at $26.91, indicating a potential for limited upward movement. Considering the bearish outlook, a short position is more suitable for capitalizing on the expected price drop. To implement this strategy, an entry price of $25.50 would be appropriate, allowing for a small buffer above the current price. The stop loss should be set at $26 to limit potential losses if the price unexpectedly surges. The target price should be set at $24, aiming to capture a reasonable profit from the anticipated decline. This strategy prioritizes risk management and capitalizes on the short-term bearish momentum of Ethereum Classic. Polygon's historical price data reveals a volatile trend with fluctuations above and below its current price point. The forecast indicates a potential downward movement in the coming week, suggesting a bearish outlook. Considering the price history and the forecast, a short-term investment strategy focusing on a short position appears to be the most suitable approach. An entry price of $0.475 aligns with the current price and allows for immediate capitalizing on the anticipated decline. The stop loss should be set at $0.485, slightly above the current price, to protect against any unexpected price surges. The target price can be set at $0.4585, the support level, aiming to capture potential profits from the anticipated price drop. This strategy leverages the short-term bearish outlook and aims to maximize gains within a limited timeframe. The historical price of AEVO shows a volatile trend, with both upward and downward movements. However, the forecast price suggests a continued downward trend over the next week, reaching as low as $0.305. This, coupled with the current price being close to the resistance level of $0.345, indicates a bearish outlook for AEVO in the short term. Considering this, a short position seems to be the most suitable strategy. Therefore, an aggressive short-term investment strategy for AEVO would involve entering a short position at the current market price, which is slightly above the forecast price. The stop loss should be set at $0.345, the resistance level, to limit potential losses if the price unexpectedly moves upwards. The target price should be set at $0.318, the support price, allowing you to capitalize on the anticipated price decline while minimizing risk. Based on the provided information for optimism, a short-term bearish strategy appears most suitable. The historical price data reveals a recent downward trend, with the forecast predicting further declines over the next week. While the price hovers near the support level of $1.645, the resistance at $1.898 suggests limited upward potential. Therefore, an aggressive short-term investment strategy would involve taking a short position at the current market price, which is close to the forecast's high point of $1.88. Setting a stop loss at $1.90 would protect against unexpected price surges. The target price should be set at $1.65, aiming to profit from the anticipated decline towards the support level. This strategy capitalizes on the current bearish momentum and the forecast predictions, aiming for a quick return within the short term. Based on the provided price history and forecast for STRK, a cautious short-term investment strategy appears most suitable. The historical price data reveals a recent decline, and the forecast predicts further downward movement over the next week. Although the support price at $0.3748 suggests a potential floor, the anticipated price drop towards $0.414 and below, according to the forecast, indicates a higher probability of losses than gains in the short term. Therefore, a short position is recommended. An entry price around $0.466, aligning with the recent historical low, would be advisable. A stop loss should be placed at $0.481, above the recent high, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.396, aligning with the forecasted lowest point, allowing for profit-taking before the price potentially reaches the support level. This strategy aims to capitalize on the anticipated downward trend while managing risk through a defined stop loss. Based on the provided price information for Solana, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent upward trend, but the forecast indicates a slight correction in the coming week. The current price is near the resistance level of $197.53, suggesting that a pullback could be imminent. Therefore, a short position is recommended, aiming to capitalize on this potential price decline. An entry price around $196 could be considered, with a stop loss set at $199 to limit potential losses. The target price could be set at $188, aligning with the support level and offering a reasonable profit margin. This strategy capitalizes on the short-term price fluctuations while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Jupiter, a short-term investment strategy appears to be the most prudent approach. The historical prices show a recent upward trend, but the forecast indicates a potential pullback in the coming weeks. The price is currently near the resistance level of $0.8993, suggesting a possible overbought condition. Therefore, I recommend a short position on Jupiter. An entry price of $0.875 would allow for capturing potential downward movement. A stop loss should be placed at 90 cents to limit potential losses if the price unexpectedly surges. The target price could be set at 80 cents, which aligns with the forecast and offers a reasonable profit margin. This strategy aims to capitalize on the potential short-term correction in Jupiter while managing risk effectively. Based on the provided price history and forecast for render, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a period of volatility, but overall, the price has been trending upwards. However, the forecast indicates a slight pullback in the coming weeks. This suggests a potential opportunity to enter a short position at a slightly elevated price and profit from a temporary decline. An ideal entry price would be around $7.65, aligning with the recent resistance level and the forecasted price dip. A stop-loss order should be placed at $7.80 to limit potential losses if the price unexpectedly surges. The target price could be set at $7.25, capturing a potential profit of approximately 5.5% before the price potentially rebounds. This strategy capitalizes on the short-term price fluctuations while mitigating risk through a well-defined stop-loss order. Based on the provided Solana name service price history and forecast, a short-term bearish investment strategy appears most suitable. The recent price history demonstrates a downward trend, with the forecast predicting further declines. Although the support price is at $0.2002, the forecast suggests a potential drop below this level, indicating a high probability of continued downward movement. Therefore, an aggressive short-term strategy would involve taking a short position on Solana name service. A suitable entry price would be around $0.249, aligning with the forecast's initial price point. The stop loss should be set at $0.255, slightly above the entry price, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.223, aligning with the forecast's lowest projected price, allowing for a profitable exit before the market potentially reaches its major support level. Given the provided price history and forecast for Doge-Coin, a short-term investment strategy appears most suitable. The recent price history shows volatility with fluctuations around the $0 and 32 cents mark. The forecast suggests a slight downward trend in the coming week, reaching as low as $0.312 USD. Therefore, a short position would be advisable. An entry price of $0.325 USD, slightly above the current price, allows for some room for price adjustment before entering the short position. The stop loss should be set at $0.339 USD, above the recent high, to minimize risk. The target price would be $0.312 USD, aligning with the forecasted lowest price, allowing for potential profit capture before the market potentially bounces back. This strategy capitalizes on the anticipated short-term price decline while managing risk through a well-defined stop loss. Given the price trends and forecast for PEPE, a short-term investment strategy appears to be the most suitable approach. The historical prices show a slight upward trend, but the forecast indicates a potential decline in the coming week. This suggests a possible short-term correction in the price. Therefore, a short position would be advisable, aiming to capitalize on the potential price drop. An entry price around $0.0000185 could be considered, aligning with the forecasted price. A stop loss should be set at $0.0000190 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0000178, slightly above the lowest forecasted price, allowing for profit taking before the market potentially encounters support. This strategy prioritizes capital preservation while aiming to capture short-term price movements. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a short-term approach. The historical prices show some fluctuation with a slight downward trend in the recent past. The forecast suggests SHIB could potentially decrease in the coming week. The support price sits at $0.0000191, indicating a potential floor for the price. The resistance is at $0.0000272, suggesting an upper limit for potential growth. In this scenario, a short position could be considered to capitalize on the anticipated decline in prices. An entry price of $0.0000220 would align with the current price and the forecasted downward trend. The stop loss should be set at $0.0000225 to protect against any unexpected price surges. The target price should be set at $0.0000195, slightly above the support price, allowing you to take profits before the market potentially reaches its floor. This strategy aims to capitalize on the short-term bearish outlook for SHIB Inu while managing risk through a defined stop-loss order. Based on the provided price history and forecast for Dog with Hat, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast predicts further declines over the next week. While the support price of $1.536 offers a potential floor, the significant drop in the forecast price suggests a high risk of reaching this level. Considering these factors, a short position appears to be the most suitable strategy. An entry price of $1.85, aligning with the current price, would allow for immediate participation in the anticipated downtrend. A stop loss at $1.92, slightly above the current price, would help mitigate potential losses if the price unexpectedly rebounds. The target price should be set at $1.55, slightly above the support price, allowing for a reasonable profit margin while acknowledging the possibility of further price declines. This strategy emphasizes risk management and aims to capitalize on the anticipated downward movement of Dog with Hat in the short term. Given the provided price history and forecast for Doge-Coin, a cautious investment strategy with a medium-term perspective appears most suitable. The historical prices demonstrate a fluctuating trend with recent declines, while the forecast projects further downward movement. The support price at $0.005699 and the resistance at $0.006215 suggest a range-bound movement in the short term. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $0.00615, slightly above the current price and close to the resistance, allows for a potential profit as the price moves towards the support level. The stop loss should be set at $0.006215, just above the resistance, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.0057, below the support level, to capture a decent profit from the anticipated downward movement. This medium-term strategy allows for potential gains while managing risk by establishing clear entry, stop loss, and target prices. Based on the provided price information for NEAR protocol, a cautious investment strategy is recommended. The recent 2-week price history shows some volatility, but the overall trend appears to be slightly downward. The forecast prices also suggest a potential decline in the coming week. Considering this bearish outlook, a short position appears to be more suitable. To implement this strategy, an entry price of $5.25 could be considered, aligning with the first forecast price. A stop-loss order should be placed at $5.36, slightly above the current price and the highest point in the recent price history, to minimize potential losses. The target price could be set at $4.94, aligning with the support price and representing a reasonable potential profit. This strategy aims to capitalize on the anticipated downward price movement while managing risk effectively. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend but with recent volatility, with the current price close to its forecast and near the support level of $9.903. The resistance is at $11.791, indicating that there is limited room for upward movement in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decline towards the support level. A conservative entry price could be $10.50, allowing for some buffer from the current price. The stop loss should be set at $11 to protect against any unexpected price surges. The target price should be set at $9.70, aiming to capture potential downward movement before reaching the support level. This strategy allows for a limited risk exposure while aiming for a modest profit within a short time frame. Given the price trends and forecast for Injective, a short-term investment strategy appears most suitable. The historical prices show a slight upward trend, but the forecast indicates a potential pullback in the coming week. While the price is currently near its support level, the resistance price is relatively high, suggesting limited upside potential. Therefore, a short position on Injective is recommended. A conservative entry price would be around $22, aligning with the forecasted price decline. The stop loss should be set at $23 to minimize potential losses if the price unexpectedly rallies. The target price could be set at $20, aiming to capitalize on the anticipated downward movement before the price reaches its support level. This strategy allows for a potential profit while managing risk effectively in the short term. BTC's price history shows a volatile trend with recent declines. The forecast indicates a continuation of this downward movement, suggesting a bearish outlook for the short term. The support price at $420 acts as a potential floor, while the resistance at $485.30 presents a hurdle for upward movement. Considering this information, a short-term investment strategy focused on a short position appears to be the most suitable approach. An entry price of $470 aligns with the current price and the downward trend. The stop loss should be set at $485.30, slightly above the resistance level, to limit potential losses if the price unexpectedly rises. The target price can be set at $420, coinciding with the support level, aiming to capture the anticipated decline. This strategy allows for potential profit from the predicted price drop while minimizing risk through a well-defined stop loss. Given the provided price history and forecast for THETA network, a cautious investment strategy with a medium-term perspective appears most suitable. The price history demonstrates volatility, with fluctuations both upwards and downwards. The recent forecast suggests a slight downward trend in the coming week, but the historical data also indicates a tendency to bounce back near the support level. Therefore, a long position with a conservative approach is recommended. The entry price should be set at $2.29, slightly below the current price and above the recent low. The stop loss can be placed at $2.15, aligning with the recent historical low and providing a safety net against significant price drops. The target price should be set at $2.56, aiming to capitalize on potential upward momentum and reaching the recent high. This strategy allows for potential profits while mitigating risk through a well-defined stop loss. The medium-term investment horizon provides time for price fluctuations to potentially play out in favor of the long position. Given the price trends and forecast for WorldCoin, a medium-term investment strategy appears to be the most suitable. The historical prices show a fluctuating pattern with both upward and downward movements. While the recent price has been declining, the forecast suggests a potential recovery in the coming weeks. The support price at $2.07 provides a strong base for a potential rebound. Therefore, a long position is recommended. An entry price around $2.15, slightly above the current price and below the resistance level of $2.299, allows for potential upside while minimizing immediate risk. The stop loss should be set at $2.07, aligning with the support level to protect against significant price drops. The target price can be set at $2.35, aiming to capture a portion of the potential upward movement predicted by the forecast. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in the medium term. Given the current price trend and forecast for Hooked Protocol, a short-term investment strategy appears to be the most prudent approach. The historical prices show a downward trend, and the forecast predicts further declines. The price is currently close to its resistance level, suggesting a potential for a pullback. A short position would allow us to capitalize on this anticipated decline. An ideal entry point for this short position would be around $0.415, slightly above the current price. The stop loss should be set at $0.445 above the recent high, to protect against any unexpected upward movement. The target price could be set at 38 cents, aiming to capture a significant portion of the potential decline. This strategy focuses on a short-term opportunity and seeks to profit from the anticipated downward price movement of hooked protocol. Artificial Superintelligence Alliance shows a 2-week price change that has been fluctuating. While it experienced a notable increase, it has recently started to decline. The forecast also indicates a downward trend in the coming week. This suggests a bearish outlook for Artificial Superintelligence Alliance in the short term. Given this analysis, a short-term short position on Artificial Superintelligence Alliance appears to be the most suitable strategy. To execute this strategy, an entry price of $1.33 could be considered, as it aligns with the recent price decline and the forecast. The stop loss should be set at $1.39 to protect against any unexpected upward movement. The target price could be set at $1.27, which is the support price and represents a reasonable profit target for a short-term trade. This strategy capitalizes on the anticipated downward price movement of Artificial Superintelligence Alliance while managing risk through a well-defined stop loss. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a medium-term approach. The historical prices show a period of consolidation followed by a slight decline, with the current price hovering near its support level. The forecast suggests a continued downward trend in the short term, but a potential for a slight rebound in the medium term. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $6.75, aligning with the recent price dip, would be suitable. The stop loss should be set at $6.68, slightly below the recent lows, to protect against further downside. The target price should be set at $7.18, the resistance level, allowing you to take profits before the market encounters significant resistance. This medium-term approach allows you to benefit from a potential rebound while mitigating the risk of a prolonged downward trend. Filecoin shows a recent 2-week price change with fluctuations, but a general upward trend. The 1-week forecast indicates a potential dip in the coming days. Considering this information and the support price at $4.917 and the resistance price at $5.974, a medium-term investment strategy with a long position seems suitable. We can enter a long position at $5.15, aligning with the forecast's low point and slightly above the support price. This provides a buffer against immediate price drops. The stop loss should be set at $4.95 to limit potential losses if the price drops below the support level. The target price can be set at $5.75, aiming to capture a portion of the potential upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential profit from the expected price recovery while mitigating potential losses. Based on the provided Conflux price data and forecast, a cautious investment strategy with a short-term perspective seems most appropriate. The historical price data shows a fluctuating trend with recent declines, suggesting potential for further downward movement. The forecast also indicates a bearish outlook, predicting a drop in price over the next week. Therefore, a short position on Conflux is recommended. An entry price of $0.158 aligns with the current price and the forecast's initial dip. The stop loss should be set at $0.167, slightly above the recent resistance and current price, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.149, taking advantage of the predicted decline and aiming to capture a portion of the potential downside movement. This strategy allows for potential profit while mitigating risk by setting clear entry, stop loss, and target prices based on the available data and forecast. Based on the provided data for Ethereum name service, the current price trend suggests a potential for short-term gains. While the recent 2-week price history has shown some fluctuations, the forecast indicates a gradual upward movement. This suggests that a long position could be beneficial for short-term investment. Considering the historical prices, the support price of $19.42 serves as a strong foundation for potential price increases. The entry price could be set around $33, aligning with the current price and below the recent resistance level of $37.86. A stop loss at $32 would protect against unexpected price drops, while a target price of $37 could capture potential profits as the price moves towards the resistance. This strategy capitalizes on the predicted upward momentum while mitigating risk through a well-defined stop loss. The avalanche price history shows a generally upward trend with recent fluctuations. While the forecast suggests a slight pullback in the coming week, the price remains close to its support level, indicating potential for a rebound. Considering this, a medium-term investment strategy with a long position appears suitable. An entry price around $37.50, slightly above the current price and below the recent high, would allow for some potential upside. The stop loss should be set at $35.72, the support price, to limit potential losses. The target price could be set at $42, a level slightly below the recent resistance, aiming to capture a healthy profit margin. This strategy allows for capitalizing on the potential rebound while managing risk effectively. Given the provided BTC price data and forecast, a short-term investment strategy appears most suitable. The 2-week price history demonstrates a volatile trend with recent fluctuations around the $0.0469 mark. The forecast indicates a slight decline in the coming week, suggesting a potential opportunity to capitalize on a short position. Therefore, an aggressive short-term strategy could involve entering a short position at the current price of $0.0469. A stop loss could be placed at $0.0486 to limit potential losses if the price unexpectedly rises. The target price would be set at $0.0437, aligning with the lower end of the forecast and historical support levels. This strategy aims to profit from a short-term price dip while managing risk through a well-defined stop loss. Based on the provided price information for PENDLE, a cautious investment strategy would focus on a short-term approach. The 2-week price change shows a downward trend, and the forecast indicates further declines. While the support price at $4.013 provides a potential floor, the resistance at $4.347 suggests limited upward momentum. Given this outlook, a short position appears more suitable for capitalizing on the anticipated price decrease. An aggressive short-term investment strategy could involve entering a short position at $4.74, aligning with the current price and the forecasted decline. The stop loss should be set at $4.91, slightly above the recent high, to protect against unexpected price surges. The target price could be set at $4.013, aligning with the support level, allowing you to take profits before the price potentially rebounds. This strategy aims to capitalize on the short-term bearish momentum while mitigating risk with a well-defined stop loss. Given the price trends and forecast for the sandbox, a medium-term investment strategy appears to be most suitable. The historical prices show a volatile pattern with both upward and downward movements. However, the recent price action suggests a potential upward trend, with prices bouncing off the support level of $0.5423. The forecast also indicates a gradual increase in price over the next week, reaching $0.603. This suggests a bullish outlook in the medium term. Therefore, a long position on the sandbox is recommended for a medium-term investment strategy. An ideal entry price would be around $0.570, slightly below the current price and close to the recent support level. This allows for a margin of safety while still capturing potential upside. The stop loss should be set at $0.5423, the identified support level, to minimize potential losses. The target price could be set at $0.695, aligning with the recent resistance level and the upper end of the forecast range. This strategy aims to capitalize on the potential upward momentum of the sandbox over the next few weeks. Given the price trends and forecast for Decentraland, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent upward trend, but the forecast suggests a slight pullback in the coming week. The price is currently close to the resistance level, indicating a potential for a short-term correction. Therefore, a short position on Decentraland is recommended. A conservative entry price could be around $0.525, slightly above the current price. The stop loss should be set at $0.548, above the recent high and the forecast's highest point, to protect against unexpected price surges. The target price could be set at $0.499, aligning with the historical support level and the forecast's lowest point. This strategy aims to capitalize on the anticipated short-term decline in price while minimizing potential losses. Based on the provided information for ENG coin, a cautious medium-term investment strategy appears most suitable. The recent price history shows volatility, with a clear downward trend over the past 2 weeks. While the forecast predicts further declines, the historical price data suggests potential for a bounce near the support level of $0.1744. Therefore, a long position could be considered, aiming to capitalize on a potential rebound. An entry price around $0.209, near the recent lows, would allow for a favorable risk-reward ratio. A stop loss at $0.1744, slightly below the support level, would limit potential losses. The target price could be set around $0.248, the recent high, aiming to capture a significant portion of the potential upside. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the provided information for Uniswap, a short-term investment strategy appears most suitable. The historical price data reveals a recent peak, followed by a slight decline. Although the forecast suggests a continued downward trend, the price remains relatively close to its support level. This indicates potential for a temporary bounce or consolidation before further decline. Therefore, an investment strategy involving a short position with an entry price around $13.50, a stop loss at $14, and a target price of $12.50 is proposed. This strategy aims to capitalize on the anticipated downward movement while managing risk by setting a stop loss above the entry price. The target price is set below the forecast lows, allowing for potential profit before the price potentially finds support. Given the price trends and forecast for Chainlink, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering around the support level of $15.28. The forecast indicates a further decline in the coming week, potentially reaching as low as $19. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $20 would be ideal, aligning with the forecasted price. The stop loss should be set at $21 to protect against any unexpected price recovery. The target price should be set at $16, slightly above the support level, allowing you to take profits before the market hits major support at $15.28. Based on the provided information for Aave, a short-term bearish investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast suggests further declines. The historical prices indicate a recent peak around $354 and a subsequent drop. While the support price is relatively far away at $170.43, the resistance price of $309.73 suggests a limited upside potential in the near future. Therefore, an aggressive short-term investment strategy would involve taking a short position at the current market price, with a stop loss set slightly above the recent high of $354. This would limit potential losses if the price unexpectedly rises. The target price would be set around the support price of $170.43, aiming to capitalize on the predicted downward movement. This strategy leverages the short-term bearish outlook indicated by the price history and forecast for Aave. Based on the provided information for EOS, a short-term investment strategy focusing on a long position appears promising. The historical price data reveals a general upward trend, with recent fluctuations around the support price of $0.7713. The forecast price suggests continued upward movement, peaking around $0.845 in the coming week. This positive outlook, coupled with the price being relatively close to its support level, presents a potential buying opportunity. Therefore, an aggressive short-term investment strategy could involve entering a long position at the current price, around $0.794. A stop-loss order should be placed at $0.7713, below the support price, to limit potential losses. The target price could be set at $0.845, aligning with the highest forecasted price, allowing for a significant profit if the upward trend continues. This strategy capitalizes on the anticipated price increase while mitigating risk through a well-defined stop-loss order. Based on the provided historical price data and forecast for Tron, a short-term investment strategy appears to be the most suitable approach. The historical price fluctuates around 25 cents, indicating volatility, while the forecast suggests a slight decline over the next week. Entering a short position at $0.266, near the recent peak, allows us to capitalize on the potential downward movement. Setting a stop loss at 27 cents, slightly above the entry price, helps mitigate risk by limiting potential losses. The target price should be set at $0.249, aligning with the lowest predicted price in the forecast. This strategy aims to profit from the anticipated short-term decline in Tron while managing risk through a well-defined stop loss. Given the price trends and forecast for Suncoin, a medium-term investment strategy focusing on a long position appears most suitable. While the 2-week price change shows some fluctuations, the forecast indicates a gradual upward movement over the next week. The current price is relatively close to its support level of $0.02067, suggesting a potential for a rebound and upward momentum. Therefore, an investment strategy could involve entering a long position at the current price, with a stop loss set slightly below the recent low of $0.0243 to mitigate risk. The target price could be set at $0.0266, the resistance level, aiming to capitalize on the forecasted upward movement. This strategy allows for potential profit while managing risk through a defined stop loss, taking advantage of the perceived medium-term bullish outlook for Suncoin.